Thoughts on the near-term outlook for the market, and is it going to be driven by the return of the search for yield?
James, I do potentially think it could be, given the fact that we have seen a huge pullback in a lot of those high-yielding stocks, particularly those banks. So we could certainly start seeing investors jumping back in yet again. I do think short-term we can potentially expect to continue seeing this volatility, particularly looking at seasonality. September and October are often months where we actually do see increased volatility. So we certainly saw that coming through in September, and I do think that October we could actually continue seeing the same theme and a lot of that volatility continuing. Some of the external factors as well really impacting, being that continuing fall in the iron ore price, and also having a look at the US increasing talks about those interest rate rises as well, which all certainly I think could continue to put pressure on the markets in the short term. But certainly looking at the long term, I think the underlying fundamentals do look very strong. Valuations still look okay, and earnings are continuing to grow. And of course, monetary conditions do still remain very low at this stage. So I think looking at a long-term view, we can expect to continue seeing that market tracking upwards. But certainly in the short term, I think we can continue seeing some volatility.
Some corporate reaction. Retail sales out rather disappointing today, Leanne, and unsurprisingly a bit of a negative reaction on market.
James, that's exactly right. Unfortunately, when we did see that figure coming through, we saw that Aussie dollar falling below 87 US cents, but we also did see a lot of those retail stocks coming under pressure. We actually saw the likes of Myer, Premier Investments, Kathmandu, all closing in negative territory today off the back of this result, which, as you said, was very disappointing. I think it was an indication that potentially volatility is actually now coming back into some of these monthly statistics. If we do have a look at that result, it actually does look like the problem is coming out of the retailer, not the consumer. If we have a look at that household related category, so furniture and hardware, that was actually very strong. We also saw cafes and restaurants are very strong, up about 13%. But the worst out of all of it was those department store sales, as well as clothing sales and electronics. So really an indication that those retailers are the ones potentially suffering. And I do think going forward we can potentially expect to see some further volatility coming out of the retail sector, particularly in the wake of a lot of this weak income growth and weak credit growth as well. So I do think long term we can continue seeing a bit of an uptick in that retail sales figures, but certainly short term I think potentially again a bit of volatility is probably expected.
So a bit cautious on the retail stocks?
A little bit cautious on the retail stocks for sure, particularly given this retail figure. But drilling down into some of those results, as I mentioned, it really is those retail figures that are suffering and those department stores. So probably a little bit cautious about the likes of Myer. But I suppose we'll probably need to review some of the valuations in some of those stocks given this retail sales number that's come out today.